What's up, guys? Bluff, how you doing, man? Okay, I'm just gonna talk about the market again. All right, so we got Bitcoin coming down, bouncing off the 50-day EMA here. And yesterday, we contemplated between jumping in on Bitcoin or Ethereum based on its positioning and its structural evidence for a good stop loss guard against our target. And we were targeting this supply concern here. And we're mitigating it now, but now we're consolidating right now, trying to define whether or not we're going to continue. Based on the current price action, there's a good chance that there might be a sell wall here. So I'm just going to take a look at the order books really quick. What's up, Dennis? How you doing? Sterling. Good morning, Bull Runner. Constantine, how you doing, man? Okay, sell wall at 114,770, small one. Okay, so if there was a sell wall here, it's been mitigated. There's not very much confidence up until 114.76. I'm just going to mark that really quick. Is it 076 or 7,600? All right, okay, 77. Okay, so we have a small sell wall for the amount of about 225 Bitcoin here. All right, 225 Bitcoin sell wall on a 15-minute order block. So there could be the residual orders itself, could be the limit orders. We have, so if we break past this key area here, we could just get that continuation to our next little barrier here. I am going to be switching up my strategy a bit. I've been working on a mechanical-based strategy that requires you basically just stare at the order books for a burst momentum-based move with almost zero drawdown, like 80% of the time. It's the exit plan criteria is what I'm still working on. The entry plan criteria is pretty straightforward. But you jump in, you're basically going in with a very, very, very low chance of drawdown because it's based on order book behavior. So if there's a clearance in the order books and the volume exceeds that clearance, then there's a strong chance with no drawdown, and you'd end up getting at least a 1-to-1 during that initial push. But yeah, once I have it more developed, I'll let you guys know. But the win rate is insanely high. It's just a matter of developing a proper exit plan that people could follow whenever I enter a trade. What's up, Coma? How you doing? Delta G. I'm doing pretty good. Thanks, man. But yeah, so we had that double bottom here on Bitcoin. It did a decent run up. And then during this period, ironically, the Bitcoin dominance started to shift and get stronger. I chose to trade this same move on Ethereum, and I got stopped out. So we had similar structure, right? We bounced off of this recent demand zone, which if you zoom out, it's a macro valley area, more of a macro valley area low. We had a 20-day, this is a 20-day valley area with slight double distribution. We came down into this demand zone on the valley area, and we were long alongside Bitcoin as we got a change of character on Ethereum, but we did not get the change of character initially on Bitcoin because just structurally it just didn't get that lower low, right? Where Ethereum has. So the confidence, I get more confidence in a change of character than I do with internal price action if we had here. So I took the trade on Ethereum, and of course it lost. like it just, yeah, it started off strong as soon as we entered on this little doji, and then came down, tapped me out. Yeah, before eventually coming up towards where we were first initially targeting for our TP1 and our potential exit plan as well. So if I zoom out and I show you my signal here, we took I gave the signal for basically the exit plan of the point of control alongside the supply zone top. And then we were targeting the remaining portion is going to be at the value area high, right? Because in order for us to get to the point of control, we have to slip past the value area low, and we have that potential probability of the continuation if we get acceptance into the value area. So the residual target was based on getting that proper pullback and break a structure with higher high to then give us a target extension to the value area high. But instead we failed to create that higher high, and we broke for a double top, and now we're back down to pretty much where we were starting. But yeah, Bitcoin, however, is doing basically what we wanted Ethereum to do when we took the Ethereum trade. So yeah, such a bummer. But more opportunities in that strategy, yes. So I'll be using an indicator called the point control bands. So think of it like using, think of it like sort of like using a trailing VWAP, but it's pulling POC data from a non-anchored point. So like the POC data is basically following the price action rather than following a fixed level like you would with a fixed range volume profile or a still imaged visual range volume profile. So it's going to be moving around a lot like a center moving point of a Bollinger Band, and it's going to be used to define our bias in our setups. So if we get that, if we have price action above it, we'll be biased short. If we have price action below it, we'll be biased long, because the PUC is kind of like the fair value, the largest fair valuation point of a fixed range volume profile, right? So this is doing that, except it's trailing the price action and is anchored to the beginning of the asset in a sense. But it has lots of opportunities. We only trade on the 15-minute time frame, and it's been tested on 2 assets so far, so we can have more opportunities. Now, because it requires me to look at the order books very actively between like I'll be doing it between like basically 8 a.m. to 5 p.m. kind of thing. And yeah, doing 2 assets at once, it's already like hard enough. So I did test it on like 2 assets where we'd likely get a decent amount of opportunities. Like one's gonna be Bitcoin, one's gonna be Dogecoin. And yeah, win rate's really high. It's like 80 to 90%. It's just if that's only if your exit criteria is evolving, like based on the conditions. So I think we need to make a more mechanical based exit plan rather than have it just be an evolving plan based on the conditions of the market. If so, we can make it more beginner friendly in a sense. If we have it based on the conditions of the market, then it's still great. It's just you'd have to be a little bit more of an experienced trader. But if people are following along me in the signals, when I give these posts, it's gonna be pretty easy for them to follow along. But if someone's alone and they're not a part of the community, it might be a little bit more difficult. So I'm gonna work on like some exit rules for it. How you doing? Sam, how you doing, man? Matrix. Good morning, guys. But yeah, so we know that we have a sell wall at 114,770 at this 15-minute order block in confluence with this local high. So there's a probability of us potentially hitting our head here. And it might cause reversal for us to stay within range. But if we break past this, which is very likely as well, it's not that big of a sell wall. I'll be looking at the top side here. We should look at the liquidity heat maps and see how it's behaving. It does look like we're just barely trying to hold this uptrending momentum, right? If we go to like the higher time frames, a lot of what we saw when we came down here was basically just a wick, right, off of this daily evolving momentum that's been holding us up since 76,000. So on the daily, we might see structurally like something like an ascending double bottom kind of posture before potentially coming back up and getting acceptance back inside this valley area and just holding this momentum just a little bit longer. But if we end up breaking past this high, then yeah, then we can see our run up to like around 25K. But that's a big ask. We have a few barriers that we have to break through in order for that to make that possible. So initially, if we do break the local high here, I'll be looking for a move to 117K, where I'm going to anticipate potential resistance off this valley area low. If we break past it, then awesome. And we get that continuation from acceptance into the valley area and start targeting the valley area high. We'll be mindful of the supply barrier that we have marked on our screen around 118.1K. But yeah, one step at a time kind of thing. So we had to break this high in order for this to be possible. And we had to get acceptance into here in order for this to be possible. In order for us to get here, we had to mitigate this supply concern, which is in line with the point of control right now. But yeah, that's Bitcoin. Bearish case scenario, we break this neckline right here. We have this, basically this horizontal flag posture. We dip down, we had internal double top. We have this potential or macro double top forming from that fractalization. If we get that candle close below this key level on the 15-minute, then we can come down back to these lows, potentially grabbing liquidity from these wick lows here while testing the 50-day EMA again. And on the daily, this would appear as a wick if we got that recovery back above this daily momentum right here. And that could be the springboard to then allow us to have enough momentum to break this high if this bearish case scenario were to occur. But yeah, that is Bitcoin. Was it a bad idea when we were entering trades based on two different rules? I mean, sometimes we entered because of SFP, sometimes we entered because of break of structure after change. So an SFP is a front run to the change of character. So if you were entering, you enter because of one of those two conditions. You can predict that a change of character might occur because normally an SFP is a front run to a change of character or like a break of structure. So you pick kind of one or the other. Now, if your SFP doesn't provide you a good enough R&R, let me see if I can find you like a good example. So here's one right here. So see how we have the change of character right here on this double bottom. And just prior to that, we have an SFP grabbing liquidity from this low and these wicks here, right? So we swept these lows with this SFP. Now, if you're an SFP trader, most SFP traders will have their stop loss guard right below the wick because that's the invalidation point for an SFP. And then you would enter when the candle confirms, or so in this case, the candle confirmed here. and became an SFP. Now, if this candle closed like down here, it would not be an SFP. But yeah, anyways, if you're entering based on SFP conditions, you're going to be targeting as an SFP trader the local high because that's an SFP's target, right? You can then extend your target if you take the SFP trade if the change of character occurrence happens, right? So it's a matter of, is the R&R worth it if I jumped in on this SFP to front run this change of character if in the event the change of character does not happen? And the answer to this question is no. This one might not be worth it unless you are predicting that potential change of character reaction and you're being hawkish around this area, knowing that you could very well have to be forced to close your trade early if the change of character doesn't occur, right? So you can enter based on SFP rules, but you're basically front running a change of character rule. So you can do both if you want to. You could be when you have entry conditions, you can have multiple entry condition rules, but you got to make sure that when you're looking for a change of character or an SFP, it's important for both of those situations for them to occur at key levels because you can have SFPs all over the place, internally inside valley areas, for example, or you can have changes of character all over the place. But what makes it, not every change of character or SFP is equal. You have to find them at strong key levels of demand or supply, and then, or extreme highs or extreme lows of a range. And then you would have a much higher probability of seeing a continuation in those setups and not just something towards their measurable target, right? So the measurable target for the S&P is this local high. The measurable target for this change of character is based on the active structure. And the active structural measurable base target is based on this double bottom right now. So we'd have a target here before we would start to anticipate exhaustion based on the momentum. But if it's going into a valley area, for example, you could expect it to extend to the opposite side of that valley area. So here we got the exhaustion that we expected. We got a bit of a pullback, but we ended up getting that continuation because of our positioning, right? And once we got that acceptance into like this valley area, we got a target extension to the valley area high, and that's when we started getting that exhaustion. So I hope that answers your questions. But that's basically what you're kind of looking for when you're trying to give yourself multiple forms of rules of entry. And just you can be like a one-dimensional trader and only enter based on one confirmation type. And I have nothing against that at all. I actually kind of recommend it because your win rate is going to be much more predictable, right? Because when you're trading off an SFP or if you're trading off a change of character, you're trading off two different forms of odds, right? And sometimes SFP odds are lower than change of character odds in terms of hitting their measurable target. But yeah, this is one I would have taken, this SFP, if A, I was at the charts at the time. This is during a Saturday, or B, we get like maybe a lower close around here, right? Somewhere where the SFP is still valid, or maybe like around here, and the measurable R&R to the high is like better, right? It's from entering here with a stop loss here. Your R&R is not going to be a 1-to-1 in that scenario. Your odds might be great, but the risk to reward ratio based on your initial barrier is not going to be great. And you should always be trying to trade based on your initial barrier, like what you're managing your risk based on, like if I had to exit here, what would be my gains be? Dennis, is the uptrending? Okay, the trend line here beginning at 76 legit. Yeah, and we have an uptrending involving momentum from 70, 75, 74K level here. Then we have the broad momentum right here. That's much older than that. We have it from sec here 16K. This broad momentum's been from 16K here. This is a really strong one that you do not want broken. Um, and then we have the evolving one right here that's creating negative space between us and that broad momentum. If we were to suggest like how price action might behave during times of exhaustion after losing this momentum, we could range until testing this broad momentum, which suggests like an 80 some day range, which would be both annoying and awesome at the same time, right? Because like if you're a range trader and let's say we ranged between like where we currently are, like the 112K off this local high, and maybe we get like range extension up here to around like 125K, and we just bounce between here. Like that's a decent gap to capture. We're trying to get the pathing of the range. But obviously that's a really big prediction, right? To assume that we could range like that. And if we did range like that, what that kind of reset would imply is insane on the RAPL charts. But yeah, that's what I'm kind of preparing for Bitcoin. As we can have that bearish case scenario. We break this neckline, and we come down. We prepare for support again, either off these lows or off this value area, or off this 50-day EMA. When we do get that break, you could start a pull from this low to this local high here and see where Fibonacci rests. And we can see that from the confluence that we have is the 50-day EMA alongside the golden pocket and the 786. So if we do get this break, we can anticipate potential sweep of these lows and maybe get a bounce from there. So here you can prepare for like a high probability SFP zone right here. If we dip down lower, then we're looking for structure similar to this, hopefully get a change of character reaction, and then come up, and we might see fractalization of a larger double bottom, with this being the neckline. Like that's the bearish case that I'm preparing for. And if we get the break, I might not trade the short, but I would definitely prepare for the long down with these lows. If we get the continuation, because there isn't really much sell pressure above here anymore, let's say we get the bounce, we range and come up, and we break above this area, then we have to be cautious of 114.7 and then start targeting the local high in hopes for a continuation above the high. And then at that point, I'll be looking for 117 as our first primary barrier. And we do have this little supply concern here that we can mark as well. There we go. Cool. All right, I'm going to mark this. This was a 30-minute order block. We don't need this anymore. So this is one of our key levels. We will. There we go. Let me delete this too. We don't need this trend line anymore. Cool. Got it. Though we were like, it's like we're like hurting our possibility of success by taking two strategies at once. When we choose one thing, the market decides what to do the other one. Yeah, well, that was more so because of dominant shift during that moment. The last one, that was a little bit eerie. Felt like I was under attack there. But yeah, I know what you mean, man. I like when you flip a coin for heads, 50% of the chance. You throw 2 coins, get 2x. Yeah, I got you. Yeah. But when the probability of both strategies are pretty much the same, then those odds are basically equal. It's like flipping coin, same coin. I know what you're saying, but yeah. SFP incoming. Can we look at Ethereum? Yeah, we can look at Ethereum. So you're thinking the sweep of this low here on Ethereum. Yeah, you could prepare for something like that. You can grab a wick. I mean, a magnet tool. put your trend line here so you can be alerted when it crosses. Yeah, we have that little demand zone that we mitigated about half of it. So if we do come down, it's likely we could get down lower for sure. Prepare for an SFP and target whatever internal high that we have during that time, like this, for example, if we got one. We have this Ethereum on the 15. Ethereum's positioning is getting similar to Bitcoin. It does have relative weakness, so it's leading the falls and being slow to the growth, right? So if Bitcoin does break this low and only comes to here, then yeah, I think that the SFP could be possible for Ethereum. But if Bitcoin breaches this and comes lower, then the relative weakness on Ethereum could cause it to dip down lower and invalidate the idea of an SFP. But yeah, it's a good spot to prepare for sure. Any assets you guys want to look at together? Chainlink? Yeah, we can do that. Okay, so Chainlink. All right. Last time we looked at Chainlink, we were looking at this key level here. We recently broke uptrending momentum here. We had this double top break. Internally, we had this. Yeah, we started to turn around as we started to pull a fib from here to here. Found a golden pocket level, came down from there. Some people might be still in that short. If you are, then basically where we currently are is a key identifier of whether or not we're going to get that reversal or a continuation. So we basically fully mitigated this demand zone. So we can actually delete this. It's not be very helpful to us anymore. Yeah, we got that initial bounce to the momentum. It may not be the way that I predicted before, but we had, yeah, now we're having this head and shoulders posture, looking bearish right now. We're very close to getting that confirmation for a continuation down. If we get that continuation down, then we'll be seeing us looking at potential sweep of this low down here on this. I've got this marked in gold, so there's a high probability that this is a fib level that I've got drawn. So if we get from here to here, yeah, so this is the fib level. So we had that initial bounce off of this little small demand zone here, like structurally, and we bounced off the golden pocket from there. And we could be coming back down to return to this level, but it's going to be much weaker than it was before. So we'll see if we hold here. If we do come back down, like structurally right now, it does look like we have evidence that it's getting weak. We got that distribution structure with the head and shoulders. The measurable base target for this is this here. To go to the 5, we can see that we're basically just barely lacking that proper confirmation. All we need is like that lower low. But again, like you could short this, but the long would probably be a better opportunity. Based on your stop loss guard against your measurable target. And shorts, like in terms of R&R, are looking weak, but longs have better opportunity. There could be a better opportunity once we have the structure to define it. We delete that. We already know it's there. Well, that's Chainlink internally right now. Just waiting for the potential brief pullback before entering a new long. We have this downtrending momentum. We stay squeezed against this horizontal level of support and this momentum. We could have that break sooner rather than later and start to target these highs again. Similar to the kind of behavior we're expecting with Bitcoin. If we were to come down, is so we could go back up. So we got XRP request. Can look at that. What is going on? There we go. And the market's still asleep. A little bit of buyers at 13.6. Okay, so looks like we hit our measurable target, almost our measurable target to XRP. We had this little Batman head and shoulders, right? We get that break, not really giving you a very good stop loss guard, but we got that break of this low here for the continuation. Similar to what we're looking at with Chainlink, but in a larger scale, right? So we failed to get proper acceptance into a previous valley area, got the head and shoulders against it, failed, it came back down. We had 2 levels marked that we were concerned about for potential support. We rode this level as support for a little bit, and then eventually we dipped down into it, and we mitigated the whole area when we came down through here, right? So if we come back down, the probability of us breaching it is much, much higher. And that's what basically occurred here. Once we dipped down through here, we were able to fall into this demand zone. So if you were to think of in terms of like mitigation for this demand zone down here, what helps with a lot of people's visualization for giving it that higher probability bounce is you could just do something like this to show you like, okay, this is what's left to be mitigated to help you refine your key levels for potential bounces. But yeah, we basically mitigated that zone. So just send it back. There we go. We're currently holding it as support. We got this downtrending momentum. So it's starting to build basically the opposite of what we saw here. We had this ascending head and shoulders. Now we have this descending inverse head and shoulders. So it's almost the exact opposite of what we saw here, except we don't have the fancy Batman ears. But yeah, we got, this is our key area of interest. If broken, it'll help confirm it as an inverse head and shoulders. You could try to front run it from here. Unless, of course, you're already in. If you're already in, then awesome. But yeah, this is your, if you're already in on the trade for a long, then this is your continuation warning. If you get this continuation break, then you'd be targeting the upside here. We can get the measurable base target like we did last time with XRP. You just be doing it by grabbing support or the resistance, sorry, to the support level. This is momentum based on the inverse head and shoulder structure. And then upon your break, you'll be targeting up here. That's a measurable base target. But personally, I'll be treating this level very seriously. There we go. If we manage to break past this, then we have a bunch of fair value gaps to fill. A little one here, decent one here. And that could cause a faster pace move to our supply concern right here. But that's XRP. It's structurally looking like it's a position to be bullish. I don't have much of a scenario to prepare for if things were to be bearish structurally. If we get that, of course, if we get the break of this low, we mitigate the remaining amount of this demand zone could fall down to our next little tiny area of interest. We have a bunch of key areas along the way down, but we can target all the way as low as down here if we were to get that break to the downside. But structurally, in preparation, it's just a lot easier to look at the potential long scenario and to prepare for it. Especially if you get that break, the probability of that run up is much higher than us coming back down right now. There's likely liquidity resting above these highs based on the order flow. Think of stop losses after each break of structure that occurred. Think of liquidation levels. So based on the posture here, sweeping all the liquidity from the lows, statistically, we're more likely to come to the upside. That's XRP. I hope that helps. Hype, please, although not much has changed. Yeah, since yesterday. All right, so we're at the valley area low. Oh yeah, we were preparing for a potential double bottom around here. We awkwardly got it here. This was a key low for a potential continuation. Oh yeah, we got that double top. Oh, look at that tweezer reaction. I think that's new. Yeah, so because it looks like the last time we looked at it was up here. So we got that break of this level. We can get that acceptance into the valley area. And we got the proper acceptance on this candle here when we had that pullback and got that break of structure internally within it. But this was the initial break and where you would start to target the valley area low. So that's did good so far. We are predicting a double bottom posture around like this area and around here if this weren't to be held. So far, we are building that like ascending double bottom posture. Our neckline being right here. I'll delete this one now and make this one here. We need to adapt the local valley area. We mitigated this supply, so I'm just going to include it now. How are we doing? Just gonna say this thing is gonna load. Okay. Our value area high hasn't shifted. Our point control barely moved. Our value area low adjusted a little bit. So we are getting that like internal fractalization of double bottoms inside of a potential double bottom if it were to confirm. The measurable base target for this double bottom is essentially the neckline. So you could try to front run that, but it's higher risk. If you get this break, we can start targeting the value area high once more while being very mindful of the point of control due to the supply conditioning right on top of it. And we're breaking downtrending momentum. So hype is looking bullish too. So we got XRP looking bullish, hype looking bullish, chain looking a little bearish structurally. If everything else is going to go up, Link is likely to go up with it. Let's see. But what would you prefer to trade? That's basically the question you got to ask yourself. Would you prefer to trade this kind of structure, this kind of structure, or this kind of structure? And if I were to pick between the three of them, like I think hype is actually the most transparent, easier to trade. You don't want to be fighting for your money like I have been lately. So we got this one looks like a little bit more easier to trade against all the other ones. Gala. Let's take a peek at Gala. I'm actually kind of wondering, but Gala's macro positioning right now. July 31st, last time we looked at it. This is our pathing that we got to worry about. Just going to draw this out for anyone who's using my charts. Break this high here. Break this low here. XRP. Break this high. Watch out here. And best case scenario here. Gala, what are you doing? Let's zoom out a little bit. Come back to our demand zone that we have drawn. But we're doing this all on a macro value area low. If I zoom out, similar to DOT kind of vibes, where it's stuck inside of a range for a long period of time. Like it's about the same age. Like this is 1,150 days where we've been inside this macro range. DOTs percentage wise is pretty intense. It's like 200% from the value area low to the value area high. It's not including, the deviations of the value area. So that's pretty intense where you can pretty much potentially double your capital from a spot hold around these areas for Gala. You can't assume that the asset will get there, so you got to make sure you get the structural evidence of support, right? Like that change character reaction at these lows is a good front run, but you always got to prepare for barriers that can bring you right back down, right? So we have this downtrending momentum here. We have our point of control right here. Right now we're at a demand zone, so if we do come up here, we got to prepare for this supply concern potentially causing us to come right back down. And if we have a slow pace, it might meet the downtrend momentum in confluence with these bearish key levels. Now, if we zoom in here, it looks like I had this marked for potential SFP. I'd be careful trading this in the short term. It might be better for a longer term set because Gala's kind of got his butt kicked lately. It doesn't have as much liquidity as it used to. So we have these really crazy wicks all over the place. So just be aware of that when you do your trades, that you could get wicked out. Luckily, it doesn't seem to happen at these low-key levels. What does seem to happen along your way up. So if you are trying to evolve your stop loss below like breaks of structure, like strong lows, every time they occur, you got to be aware that you can get knocked out along the way up. We have this downtrending momentum here on Gala right now. Bouncing off of just dancing around that point of control here. It's giving me the same kind of vibes as Chainlink, where it's like structurally looks like it's preparing for a potential drop. But yeah, if it follows through with everything else, it could break this internal momentum and start to come back up. See what I mean? Like structurally, it's pretty similar. So for me to want to enter long on this thing, I would hope for a return down to these levels here, based on, rather than a head and shoulders, be more so defined based on this kind of like double top structure, this double top posture. You just gotta have a break of this point of control that's currently holding it as horizontal level support right now. That's Gala. Let's see. So if Bitcoin breaks this neckline, then the Gala and the Link bearish boost will very likely occur. So follow along with what Bitcoin's doing with this neckline key level, because if it breaks, then these ones are likely going to drop. Hype coming up for a test of that neckline. Hope you're doing well. You're well and lose 12 pounds. Thanks, man. Appreciate it. So that's Gala. Let's see what Solana is doing. I got about 10 more minutes. Hey, it's a new strategy for the challenge in the course. Thanks. It's not in the course. I haven't recorded it yet. I haven't even told anyone about it yet until now. So it's not in the course or anything like that. But it's definitely going to be for the challenge to help me get to that $1 million marker faster. Because it might find opportunities outside of my normal core strategy, which this is my normal core strategy right here, right? Break up downtrending momentum, change. Well, this isn't the change of character, but we get the break of a double bottom neckline and at a valley area low. So this is my strategy almost to like a perfect T. The only thing that would make this conditioning better for hype is if we had that descending double bottom instead of the ascending double bottom. Nothing wrong with ascending double bottoms. It's just they're better for Fibonacci traders for sure, because you tend to want to try to get in on the bounce here, because when you have ascending double bottoms, they're almost always bouncing off a golden pocket. It's like magic. So if you guys ever look around for like these double bottom postures that are like this with a higher low, that higher low is almost always bouncing off a golden pocket level. So it's good for Fib traders. When you see that internal low time frame change of character, like for example, like the 3-minute at a key level, like you'd see right here on like the 3-minute, this would be a change of character reaction. You're preparing for a run up. And once you get that 3-minute posing change of character, you then start doing your pull from the low to the high to find your fib level to prepare for this to potentially become an ascending double bottom. That's how you kind of predict that wave. But you initially would jump in down here with this being your core barrier. I'm just going to screenshot this really quick. I'm just going to put it in here. I'm not going to be able to have time to write stuff out, but okay, Solana. Let's take a peek at Solana. Solana, what you doing, man? So we had this. Okay, this is our most recent look back. We never got that double bottom. We just got the bounce. That bounce mostly mitigated this demand. We came back, tap it one more time, broke right through it. Now we're kind of using it as resistance. So similar kind of vibes to XRP in a sense, where kind of getting that inverse head and shoulders posture. This being our key level. Why do we keep doing that? Let's see. Yeah, this looks like a really good. A couple opportunities recently. We had this sweep here of this low. We had this most recent one right here. And the measurable target for this SFP is this high, so it's trying to accomplish that now. If you get that break, anyone who took the SFP trade has a continuation warning. If we fail, you have to use low time frames to determine like maybe an opposing change of character, like the 2-minute or 3-minute. But yeah, we're about to hit that measurable target for this SFP here. If we get that run up, we have a couple supply concerns. Unfortunately, we have one like right in our face, right here. But if we breach past that barrier, just mark this as like potential local resistance. There's just a chance that there could be heavy weighted liquidity in this area that could be used as exit liquidity for anyone who may have entered down here. So you just got to be aware that you might see that pullback as soon as we get here. And that pullback could induce a retest. If we don't get that higher high, then we're not going to be coming up to our next supply concern here. But here's where you would mark your next little barrier concern. We have a 15-minute and a 30-minute order block. And it comes close to a previous value low. Then your next area of concern would be up here on Solana, or 171, close to this point of control. So the pathing that I'd prepare for is something like this. The best case scenario, you get something like that instead. In worst case scenario, we don't do it at all, and we just break this low right here and come back down to this area here. But that's Solana. I hope that helps you out, man. Why don't you want to lose viewers, but can you look at, don't want you to lose viewers, but look at XRD. The founder died recently before delivering his research. Awesome tech, terrible chart. Is there a 1% revival chance? So the revival chance is not going to be based on what you see in the charts, unfortunately, and stuff like that. It's going to be based on like who takes over and the marketing and stuff like that before investors consider it a dead project. Because when the creator dies, sometimes there's a chance that the project itself dies along with it. We can take a look at it. I only got 3 minutes left. XRD, USDT, Radix. He says a terrible chart. So let's see. So you got a little bit of life into it for sure. Zoom out on the daily. Ah, okay. Let me zoom out. It doesn't look like that. Yeah, not very much life into it when you zoom out. Yeah. Okay. It could become a zombie token. Like basically what a zombie token is when you see like it flatline, kind of like a heartbeat. Yeah. So if we end up seeing no one take over the project, then I could see it just continuing to go down as people discover what happened. Right? It's well, it's not like Tesla or something like that where you expect like someone to take over like Elon Musk's spot, right? Like he's already really good at delegating that kind of stuff. Whereas with crypto, it's a little bit different. You don't trying to find someone who's interested in taking over and has the capacity to take over. It's not really it's not really the same we expect with the company. See, we lost this value area harshly, and we dropped 50% from the value area, and from this local high, it's about 70% of its market cap just disappeared after testing this 200-day EMA. And we could come back up, but there's like I said before, it's not gonna be really based on what you see in the chart. It's gonna be based on what you see in the news in this case, like if someone gonna take over or stuff like that. You can see with the blocks and the candles, the gaps in the candles, that there's really poor liquidity now too. So people could have pulled their LP. Just hit a local value high. So yeah, I'll be prepared for it to potentially come down. And there might not be a a short or futures opportunity with Radix. If there is, I would be prepared for mostly shorts. But as soon as good news comes out, it could melt your face off for sure. So just prepare, keep your eyes, your ear to the ground when you're looking for like news on this thing, because that's going to be your conduit for potential entry. Obviously, use structure alongside that. Like if you see like a double bottom posture, that's evidence of people accumulating, right? Like there was people accumulating here. But try to use that in confluence to the news in this case scenario. Hope that helps you out, man. But it might be a dead asset, so be careful investing in it. If you invest in it, you put in like scratch ticket money based on hopium that someone takes over the project. If you think the tech is enough for someone to want to take over, then maybe there's hope for this thing. All right, guys, I do got to head out. I got a call with the community that started about a minute ago. So I'll jump over there for anyone who is in the community watching. I'll see you guys in a moment. Thanks a lot, guys, for the tips, the subscription, everyone who's been subscribing, sharing, and all that fun stuff. But yeah, we'll get this ball rolling with the new strategy that got built. I'm very, very, very optimistic about the outcome of the outcome of the $1 million challenge. And on top of that, like I think I know like I just have a little hiccup with my win rate. So I will be like still focusing on my normal TA that I normally do, but this mechanical based strategy is not really based on market structure like I usually do my trades. It's based on high probability burst movements based on clearance in the order books and the volume difference between that potential gaps in the order books and stuff like that. I'll explain it to you guys in more detail very soon. It's just a matter of like making sure it's a viable strategy that we can build like exit plans off of too. All right, guys. I'll see you tomorrow. Tomorrow morning is so tomorrow's Thursday, so I'll be starting my live at the same time at 8:30. All right, guys. You have a great day, and thanks for watching.